It now looks like interest rates have peaked and inflation's under control, so those interested in property are wondering what's ahead for our housing markets. Well, in today's Property Insider Chat, Dr. Andrew Wilson and I give you the update on the latest rental statistics, what's happening with retail figures and spending, and despite what the media is telling us, boy, we're still spending up big. But what's really interesting is the first weekend auction results, which showed significant depth in the market, lots of properties for auction, but also lots of buyers with very high auction clearance rates resulting. If you want to keep up to date with what's happening in our housing markets, please subscribe to this YouTube channel and click the little bell icon so we can let you know each time a new show comes out. Since the pandemic's onset a number of years ago, finding a rental property in Australia has become almost as challenging as snagging a seat at the AFL Grand Final. Rental availability has plunged by half. Rents in our capital cities have skyrocketed, a staggering 33% over the last couple of years. While landlords aren't complaining that for once their rental income is rising faster than inflation, this scarcity is a headache for tenants who are now grappling in a highly competitive market. In our regular Property Insider chats, Dr. Andrew Wilson and I have talked a lot about the factors that have led to these extremely tough conditions, including the trend towards living in smaller households, a rebound in population growth, a shortfall in new housing construction, a slowdown in dwelling completions, not to mention investors cashing out and selling up their properties. So what's happening in our rental markets at present? That's what I'm going to ask Dr. Andrew Wilson, Australia's leading housing economist and chief economist of My Housing Market Today. And I'd also like to get his take on the latest retail figures, as well as the auction results for the first busy auction weekend of the year. Hi, Andrew.
Yes, good morning, Michael. And unfortunately, no good news for tenants in the latest My Housing Market January rental report. I'm not sure we're ever going to be able to provide good news for tenants going forward, certainly in the foreseeable future. And
there doesn't seem to be an end in sight to this, does there? We've discussed this before.
No, I think a number of interesting points. I think once you get to a sort of a critical zero type vacancy rate, it's very difficult to shift. It sort of goes up and down a bit. And those movements from month to month, even though they look like movements, are really just trundling along the bottom. There's no real change in terms of the real availability of property for tenants.
Well, the media, interestingly, Andrew, has been saying there's relief coming, but I think your point is right. It's gone from no properties for lease virtually to just a couple. The vacancy rates remain at incredibly low levels, don't they?
Yeah, and it's not unusual to see queues of people outside properties that are being advertised for rent. I see this in Melbourne, in Sydney, on the Gold Coast, in Brisbane. And this is the point, that this isn't just an individual city phenomenon. It's something that's occurring around Australia. And when you point to those factors, I think that the fact that it is so consistent really does point to a systemic problem, not just changes in population which come and go. It's the real issue is we just don't have enough houses to go around, and that means we just haven't been building enough. And when we look back historically, particularly as you mentioned, the rising demand for smaller households, the level of unit development has just collapsed. And with a trend towards, as you said, smaller developments, the popularity of apartment living for a myriad of reasons, this encapsulates just the real issue, a lack of supply, really, rather than changes in demand. And policies designed to sort of change the demand mix aren't really going to achieve anything. And governments are under pressure, not just the Australian government, but governments in the US and Western Europe are now facing political consequences of being unable to house their population. And I did an event yesterday, Michael, and I was being told that on the Gold Coast now, they're starting to pop up people living in temporary shelters on pavements. And these are the sort of things that we look and shake our heads in terms of the West Coast of America, which has been happening for some time. But now, horror, we're starting to see it perhaps occurring in major Australian cities, and that's a real concern. And
there'll always be disenfranchised people and people with drug problems or mental health issues, but this is happening to, let's call them the old-fashioned ordinary mums and dads.
That's right. Where do you live? If you can't afford to rent a property, if there are none available, and even if you sort of can afford to rent it, you're in a queue with 50 people ahead of you. So it's spin the roulette wheel, really, to a large degree, to try to get lucky and secure a property. What are your options? Friends, family, live in your car, these types of scenarios. And this is what I'm saying, that I think we're going to see social change as a result, people staying at home longer, households with numerous families per households, children having to share bedrooms, all these types of factors. And as I said, there's certainly political consequences of this. We're seeing it very clearly in Western Europe, which has more of, I guess, sense that the government should have a solution because they are models, more public housing models in Western Europe. We don't have that here. It's something governments have taken a long time to realise, and at their peril, I think, given political consequences, that we have a private sector housing supply market with 40% of our housing rental accommodation are provided by private sector landlords. And if anything, that's a solution to the problem. But we're locked in these ideological, archaic views of the housing market, which are getting governments into big, big trouble now. And it's you just can't turn it around quickly, Michael. And they may have all the aspirational targets they like in terms of what they want for new housing. They're not building the housing. It's the private sector that are doing that. And we'll look soon at the latest building approval data, which after seeing some perhaps light at the end of the tunnel, and by that I mean that we'd got to the bottom of the declining trend, it's now falling again, Michael. So no relief in sight for tenants. And
if I could, before we go into the data, as you started to say, the government has been talking about it, but something snuck under the radar at the end of last year. There was a federal inquiry into housing. The politicians came up with a recommendation about the housing crisis, but interestingly led by a politician with a green sort of colour as part of their logo, who was talking about rental freezes. But the consensus from the industry was the recommendations weren't worth the paper they were written on, and the inquiry was a waste of taxpayers' money. Lots of talk, no action, no conclusions from it. So the government, I think, as we've said, with an election coming up, a few by-elections coming up and a big one next year, they're talking about it, but nothing's coming out of it.
Well, I think they realise nothing can be done, Michael. They've just got to hang on and blame someone else and blame the system or whatever, but nothing can be done about it. We're hundreds and hundreds of thousands of homes short in this country. As I said, this is a global problem, certainly in advanced economies, and it has been because of poor management of the housing market. We're paying the same price, and perhaps politically our governments will pay, I'm sure they will pay the same price as well, because this is a fundamental service. And if we're not providing housing to our populace, those that in power that can't provide that are going to pay a price at the ballot box, I believe.
Well, I interrupted you. Let's get into the data then. So let's look at the housing asking prices to start with, please, Andrew.
Yes, well, the latest data, as we alluded to, Michael, looks at what's happened over January. So it's the first data for 2024. No relief, really. What's interesting is, and this, I guess, is part of that changing demand patterns for housing, is that we're actually saw a surge in house rents over January. Really, it's been unit rents that have been picking up over the last year or so, but house rents picked up, particularly in Sydney over January. And of course, there's a little bit of seasonal impacts here, Michael, so particularly with vacancy rates, but we take that with a grain of salt, as we were discussing before. But Sydney house rents up spectacularly by 4% over the month, Michael. $780 a week now is the median rent, asking rent for a house in Sydney. That's an increase of just under 15% over the past year. Melbourne house rents also up 1.7%, and they're up 18% over the past year. Brisbane up 0.8%, up nearly 10% over the past year. Adelaide and Perth were flat, and the smaller capitals, some relief in house rents there. But vacancy rates remain under 1%, Michael. This is crazy stuff. House vacancy rates in all the capitals, with the exception of Canberra, where it's at 1.1%, are all under 1%. And that's an upward trend over the previous month. So even though the trends are higher for vacancy rates over the month, they're still at these ridiculously low levels. And as we always discuss here, 2% is usually regarded as the balance point between landlords and tenants. Yep. Rents higher below 2 and higher above 2. But we've been trundling under 1 for house vacancy rents for some time now, Michael. And as I said, some seasonal impacts, perhaps with more demand coming through and some more supply, had some marginal upward pressure on vacancy rates, but they all remain ridiculously low, and just no sign of relief for those looking to rent a house particularly. Similar results in for units. Sydney actually went the other way for unit rents. They were down by 9.6% They've been tracking at around about $750 a week consistently for the last year or so, Michael, but just down over the month, 9.6%, but still up just under 20% over the year. Melbourne rents were up by 3.2%, so that's similar to the increase we had for house rents in Melbourne, Michael. And I think this is the story really with the Melbourne housing market, that it's catching up now, not just with rents, but I think with prices too, after a sort of an underperformance, which I think was driven by the very severe lockdowns that Melbourne... Look, I think this is a catch-up move, not surprising, because rents in Melbourne are the best part of $200 a week less than Sydney, but now starting to move upwards. And as I said, unit rents up by 3.2%, up by 22% over the past year in Melbourne. Brisbane just settled a little bit down by 0.8%, but they've increased by 25% over the past year. Unit rents, Michael. Adelaide up, smaller unit market, of course, there in Adelaide, but nonetheless rents up 3.8%. And Adelaide and Hobart remain the most affordable of all the capitals for weekly unit rentals. But when we look at the annual growth, Melbourne up 22%, Brisbane up just under 25%, Sydney up just under 20%. These are terrible numbers, really, if you're trying to budget or for higher rents going forward, and you have to cover these sorts of increases. And we're not really seeing any significant relief. Now, in terms of vacancy rates are higher for units than houses. And we saw a similar shift upwards over January. As I said, some seasonal impacts there pushed up vacancy rates, but nonetheless, they're still hovering around 1%, a little bit above 1%, with Darwin the outlier there at 1.9%. Nonetheless, really no sign there that vacancy rates for units are doing tenants any favours, Michael. And as I said, I think that we're seeing some of those more affordable capitals, the big capitals like Melbourne, are now in catch-up mode, and a lot of anecdotal evidence that there are big queues for rental properties in Melbourne now, particularly units, which I think the days where there was perhaps some relative value in rents for units and houses in Melbourne, I think are fast disappearing.
Now, there's been lots of data coming out as the year's commenced, and the Australian Bureau of Statistics brought out some data for December for retail spending. Now, we've spoken before about how seasonal effects and Black Friday has changed the way some of us spend, and even just speaking with somebody in the local shopping centre on the weekend, he was telling me how retail sales have dropped and the way people and when people spend has changed. But what was the data and what does it mean to us?
Well, no surprise that retail sales were down over December, which used to be the big month of the year for spending, Michael, of course. But now that's all about November, and Black Friday had a massive increase over November because of Black Friday sales. That was up 1.6%. And no surprise, we then had the predictable fall over December. They were down by 2.7% over the month. As we mentioned, there are issues with the seasonal adjustment models. The ABS has admitted this, but nonetheless, the aggregate level, the total level of sales is still higher than where it was a year ago, Michael. And you know, how many interest rate rises have we had? 13. We're still tracking retail sales higher than they were a year ago. Retail sales are still elevated at those levels that were inflated by the COVID stimulus packages, and they're still well ahead of where they were pre-COVID. So we're still spending, perhaps recklessly, perhaps not, but still at very high levels. I don't think there's any sense of, for the Reserve Bank at least, that this is indicating a slackening in spending and therefore less demand and therefore downward pressure on inflation. But nonetheless, it was lower, but it's still very high, those retail sales numbers, Michael.
I just wanted to remind you that this is not specific investment advice because we don't know your personal circumstances, but we're more than happy to have a chat to help you take advantage of this new property cycle. If you think about it, the opportunity like this to get set at the beginning of a new property cycle doesn't happen very often. So why not have an obligation-free chat with my team at Metropole to discuss your goals and to discuss your options. We're much more than just another buyer's agent. We help you safely create intergenerational wealth through property. We're big enough to tip the scales in your favour, but still small enough to care. And as we don't sell any properties, our advice is independent and unbiased. Now remember, property investment's a process, it's not an event, so you can't just go out and buy any property and hope to be successful. In fact, now more than ever, getting the right advice is critical. So if you're looking to invest in property or buy a new home, go to metropole.com.au and have a chat with our multi-award winning team. It's a great feeling having the team at Metropole on your side. levelling the playing field. Now, we regularly speak about the auction results. We've had a little lull over the Christmas break, and there were a couple of auctions a week or two ago, but this was the first big auction weekend, and you and I were interested to see what the market feels, because it's a really good in-time indicator of buyers and sellers sentiment compared to a lot of the other statistics that tell us what happened a month or two ago and look in the rear vision mirror.
Auction clearance rates are a clear predictor of house price changes. When we look at the cycle of auction clearance rates versus the house price cycle, they almost match each other in time, particularly for Sydney and Melbourne, which have strong auction markets. A significant proportion of sales are auction sales in Melbourne, and also reasonably significant in Sydney. Now, we've had the break. Third week in December was our really last auction. As I always say, and it is a truism, that usually auction markets start the year off where they ended, which I guess is pretty logical, really, if you think about it, unless something severe has happened over the holiday break, which usually doesn't happen. Although there are those that foolishly predict things will be different. But we do await the first results in the first week of February, the first Saturday of February, Michael, telling us a couple of things. Obviously, clearance rates are important, but also the volume of properties coming in to start the year, I think, is very important. So, look, we are in a little bit of unknown territory here, uncharted waters to start the year. How's it going to begin? Stronger or weaker? Because it does set the narrative to some degree, Michael, in terms of what we would to expect going forward. But we had a very strong, unequivocally strong start to the year, given that we're still a bit of a holiday lull about us, Michael. We're just out of January, just past Australia Day long weekend holiday. So I think the markets are still to some degree distracted, but this was not a distracted market on the weekend. Sydney had a clearance rate of 75.9%, which is clearly a clearance rate. Anything above 70 is clearly a clearance rate in favour of sellers, showing that there's reasonable competition amongst buyers for property. 75.9%. Melbourne was also over 70%. Melbourne, 71.9%. Brisbane, a solid result for Brisbane. As we explain here, the Brisbane auction market has a different culture to Melbourne and Sydney. Tends to have a lower focus on actual clearance at the auction, but so we get lower clearance rates there in Brisbane. Adelaide also over 70%, and Canberra, a slower start to the year, 52.4%. But I think what was important to note, Michael, with the results was the volumes of auctions that went up. We had a remarkable number of auctions for the first weekend in February. 540 auctions in Sydney. That's a very heady number for this time of the year. And you just look back to the beginning of last year, Michael, 358 auctions versus 540. So to have a above 75% clearance rate with such a big number of auctions just shows there's still a lot of vibrancy in that Sydney market. Melbourne, similarly, solid numbers of auctions in Melbourne. 423 auctions in Melbourne, which was well above the same time last year. And also the smaller markets, Brisbane, 94 auctions versus 64 last year, same weekend. Adelaide, 102 auctions versus 89 the same weekend last year, and 107 auctions in Canberra. Canberra tends to start the year very strongly, Michael, and maybe those higher numbers of auctions in Canberra were part of the story for a lower clearance rate. But nonetheless, I think you can't argue that this was a strong start to the year, Michael. It sets the scene, solid confidence from buyers and sellers. And as I said, particularly confident from sellers, that are happy to put their property into the market. And considering they would have made their decisions over New Year or before to put their properties up for sale at the first weekend. Now, we're going to get more auctions coming through, of course, the next few weekends. Particularly in Melbourne, of course. Melbourne ramps up very quickly towards the Labor Day long weekend in March, which is the first weekend in March for Melbourne. The weekend before that long weekend holiday is the first Super Saturday of the year. We expect to see big numbers of auctions in Melbourne, and that's been a good start for that Melbourne market, which, as I've said also, I think is primed for a little bit of catch-up energy this year compared to other capitals and underperformance last year. So a good start to Melbourne, but a particularly good start to Sydney. And as I said, I think the real standout there, not just very solid clearance rates, was the number of auctions across the board that were conducted. So sellers are pretty happy to engage the market at the moment, Michael.
Well, there's clearly quite some depth to the market, and that's important. And as the year goes on and people realise we're unlikely to get more interest rate rises, inflation's coming under control. I'm not saying interest rates are going to drop anytime soon, But as confidence rebounds, more sellers are going to come onto the market. And I know some commentators are saying that's fantastic, it's going to bring more stock on. But we always remind people that most sellers are actually buyers. So there's also going to be more buyers competing in the market.
Yeah, that's exactly right, Michael. There's a lot of nonsense in regard to housing market commentary. We should be used to it. And one of the big differences this year compared to last year is we haven't got the gobbledygook predictions of house price crashes that we had to trawl our way through last year, which of course all proved to be complete nonsense as usual. So I guess that's added to a bit more confidence early days in the market, that we're not being confronted by the clickbait rubbish in the media in regard to the prospects of for the housing market, because they're all reasonably solid this year. And we've had a great start to the year, really. And I think this is the point, that markets are now just tracking at their base levels of supply and demand. And like I said, some markets are primed for a catch-up, in my opinion, Canberra and Melbourne. And some markets are continuing to prove that demand is ahead of supply, such as that Sydney market and also Brisbane and Adelaide.
Well, we'll be back each week having a chat about the various factors influencing our market and giving our thoughts. Thanks for your time again, Andrew.
Yeah, interesting to see next week's auction results, won't it, Michael?
It will be. Let's just see if it continues on. Thanks.
Yeah, bye now.